Good morning, everyone. Thanks for joining. We'll get started in a couple of minutes. Just need confirmation that you are able to hear me and you can see the screen, Profitable Futures Trading. If you can give me a thumbs up or just drop a note in Q&A box, I would appreciate that. If you are able to hear me, please give me a thumbs up. Still waiting for a confirmation. Few people have joined. I haven't received a confirmation. If you can hear me and see the futures trading slide on the screen, please give me a thumbs up or drop a note. Should be able to find emoji icon somewhere on your screen. Can someone give me a confirmation? I have to check whether I'm audible or not in a different way. Yes, I guess. Okay, I'm audible. All right. Thank you for joining this morning for this webinar, Profitable Futures Trading. This is a masterclass, special one on the occasion of Thanksgiving. Hope you all had good Thanksgiving. In this webinar, I will cover everything about system called Sliver Bullet Trading System. But before I get started, okay, yeah, somebody raised hands, so I guess it's a confirmation. All right, excellent. Thank you for confirming. So this, I'm sorry, I'm struggling with technology here. So in this webinar, we will cover Sliver Bullet Trading System. But before I move ahead, I want to show this disclaimer that this webinar is not about any financial advice. It's about a trading system. Individual results vary. Performances depend on many factors. So there is no guarantee that is being marketed here on this webinar. So just a statutory disclaimer. And with that done, this webinar is about Sliver Bullet Trading System, which was developed by Sliver Trades. And we believe it could be your path to financial freedom. I am Rao K, the founder of Sliver Trades and also the architect of Sliver Bullet Trading System. We are a company based in Chicago, Illinois. And this presentation will have several parts, and it's going to be at least 90 minutes long. So be prepared. We are going to discuss the entire business model of futures trading. We call it Sliver Bullet Trading System. This webinar has three parts. One is the education, where we cover the business model. And the second part is the software, which is a core of this system, which can help take automated trading. And the third part is the offer, a special Black Friday offer that we still have. And we will show you the details of that offer, the discount, and all that. So brace yourself. I'm going to reveal some important stuff. But before I proceed, I want to run this quick poll and want your feedback on this. If you see the poll on your screen, please respond to that. And I want to know who all have experience in trading and who all are new. So please respond to the poll. Okay. I have more participants. I need some more results. Many people haven't responded yet. This requires a button click, guys. Just respond, will be done. Uh, 10 seconds more, and then I'm going to publish results. Okay, so mostly people have some experience, and there is a person with no experience, so that's fine. So this helps me keep the presentation okay, so keep the presentation at a level so that everybody can understand. So thank you for responding, whoever has responded. Okay, all right, excellent. And any questions you may have, feel free to type in the quick Q&A box, and I will make sure to answer every single one of them at the end of the presentation. So the first part is education time. Second part is the demo of the software. But you know what I found useful is that I give you a demo of the software in the beginning itself, then provide the context around that system. So I will go to the chart directly here, and this is a futures trading chart for NQ symbol, and I have a particular type of bars on the chart, and I'm going to load the software. And this is Sliver Bullet Pro software, and it has different settings: ATM 1, 2, and 3. Max loss parameter is $2,500. We will target a profit of, say, $1,500 because the market yesterday was a half-day market. It was a slow holiday market, and whenever I give a demo on these webinars, I use the previous day's market data. I don't go far anywhere. I've never been selective. I just take the previous day's market data and run the software on that data in a playback mode and show you the results. So I normally use like a $2,000 of profit target when I give a demo. Yesterday was a shorter day and a slower day because of the holiday. I'm keeping my target lower than usual, $1,500, and I'm turning this software on. There are different buttons on the software. This is the user interface, the colorful buttons you see. And these are different settings called ATMs, automated trade management settings. So basically ATM 1 takes trades with one contract, 2 with two contracts, 3 with three contracts. And these are automated buy, sell, or long, short buttons. These are long, short buttons. And these are different strategy buttons, the pink ones. We use different strategies based on the market condition. And there are stop button, manual buy, sell button, and there are other buttons called scale in, aggressive mode, and things like that. So here I have set up the timer for yesterday's market open. So yesterday was November 29 at 8:30 a.m. Central, the market opens. And I have set up the timer for as of it's yesterday, and its market is going to open now. And if you see in 2 seconds, I have noticed that the market has opened slightly higher. This is where the market is compared to the previous day. That's Thursday's market close. Thursday market closed here, and now it has opened slightly higher. And before closing on Thursday, market trended nicely upside. All right, and it's opened slightly higher. So my bias now is that it's going to be an uptrending market. And for uptrending market, I'll take long trades and use one of the strategies for up trending market, trend trades. And scale in button, this is useful when the market goes against us, against our position. Then scale in will add more contracts to an existing position and try to get you out of the losing position for a break even or a small loss or a profit. So that's how it does. That's what it does, and it does it automatically. So I will start the timer now, and here you go. So here the first trade was taken with 2 contracts. One contract got closed immediately. The second one is still open, and we will see if that also gets closed. So I can increase the speed of the playback, so we don't have to sit 1 hour to see all the trades. So I have increased the speed. So now market came against me, and scale in took place automatically, and we'll see if now I came out for break even, and it was a very small profit. It was a break even trade. It's a one trade gave me a loss of $8. Second trade $21, only $13 of profit. So I'll continue taking trades. So this was also a break even trade. I'm increasing the speed. Target filled. So this one was profitable. This is running really slow. No, this was also break even, so $36, and somehow its software is running very slow at this moment, the playback, for some reason. It's super slow. Order filled. So let me just stop sharing. Let me reload the software. It's something, it doesn't seem right. So I'm going to close this and start, and I will restart the software in a minute. If it doesn't work, I will show it on a different computer. I will connect it from there and give you a demo. Just bear with me. It never happened like this, you know. It's a rare thing, but sometimes things like this happen. It's technology after all. Okay. I may have to do it from a different computer. So please bear with me. Right. So what I'm going to do is use a different. Let me see if it works better this way. So trade was taken just now, as you see, and it's still
Target filled.
running slow.
Target filled.
So
Order filled. Target filled.
so this software takes trades automatically in this fashion.
Order filled.
It's running very, very slow. It goes much faster than this. But so you see here $263 in 2 trades we were able to make.
Target filled. Target filled.
And the third trade was profitable, $394.
Order filled. Target filled. Order filled.
This was a break-even trade. So my apologies, you know, it's this is my computer is running really slow. If I may have to restart the whole thing, but if I do, connection will get lost. So I will perhaps continue at this slow pace, but hopefully this gives you an idea of what the software is doing. And it's 5 minutes now, and the profit is $579. Only 5 minutes since the market opened. So now market is trending upwards, and for the strategy that I have used, I'm not getting trades that many, but I just did get one trade here. And
Target filled.
s-
Target filled.
okay, so I'll pause it here because it's my computer is running really slow. And so in 10 minutes since the market opened, we made $700, and our target was like $1,500. Maybe it would have run for another 30 minutes and it would have achieved that target. So I'm going to pause the software here and go back to our presentation, because that's an important aspect of the webinar. And I'll come back to this software demo eventually. So first, the education time. So we just saw the software took trades automatically and showed about $700 of profit in just 10 minutes, right? Now, let me give you the context. Here we do trading mainly for some kind of freedom, that freedom is financial freedom. Before anything else, let's define financial freedom. So financial freedom we would like to define as the desire for making decisions without financial constraints, which means, we want to have freedom to travel, own a home, and pursue our passions. And trading could help achieve that financial freedom. And that's the premise we have for this webinar, that how trading can lead us to financial freedom. So to be able to do that, we have to look at trading as a business first. We should not treat it as gambling machine. It should not treat it as a lottery system. We have to look at it as a business. If it makes business sense based on our investment and time, then it's worth pursuing. Otherwise, it's not. Okay. So to evaluate trading as business, we have to look at the two components of any business, that's cost component and income component. Now, if you look at the cost component, we see that we need a computer. That's the first and foremost thing. A good computer would cost you about $1,500. You can use your existing computer if that's a $700 computer, desktop or laptop. You can still trade, but eventually people upgrade it to a faster computer as they trade more regularly. And I've taken a decent computer and used as a cost parameter, $1,500. Then you need a good internet. I took a midpoint price for that, $75 a month. And then you need a data feed. And you need data feed because we are talking here about day trading. It's not that you invest in your portfolio end of the day or in a mutual fund. You need real-time data, accurate data. And that data feed could cost you anywhere from $12 to $90. I took a midpoint number, $50. And then you need a trading platform. Since it's about day trading, you need a trading platform. Your typical brokerage web interface may not cut it. You need a very good working platform, a high-speed platform. And that platform costs either one-time fee of $1,000 or monthly subscription of $75. The platform that we use and recommend costs about $1,000 as one-time fee. Now, after that, the most important thing is you need trading funds. If you are a stock trader, if you have been trading in stocks, and if you want to do day trading, your brokerage would require you to deposit at least $25,000. At least. The reason is, for day trading, which is defined by someone defined as something where more than four round trip trades are taken every day. So since we are going, this business is about day trading, and there will be more than 4 trades per day. You would need at least $25,000 in the brokerage account before you are allowed to do this kind of trading. And this $25,000 is not enough, but this is just the minimum. Okay, so I have taken that minimum cost. To make a good living, you need much bigger fund than $25,000. Now, then you need trading education. We need to understand the market. We need to understand the market structure. We need to understand trade management, risk management, trader psychology, your own psychology, other people's psychology, institution psychology. All that, for that, all that you need some kind of knowledge, that which comes through proper education. Now, this education is not provided in schools or colleges. People who come from the family of traders, they get to know from their parents or uncles or older siblings. But uh, common people do not have this education because it's not taught in schools and colleges. Now, there are private companies that offer trading education, and in our survey, we have found that such educations, a decent one, starts at $12,000 and it goes up to $50,000, right? So I've taken the smallest number that for that kind of education, $12,000. And then you need a trade automation software because it's day trading. You have to be precise like a sniper. You need to take trades as soon as your setup forms and come out of your position. You need a software which could cost you anywhere from $500 to $10,000, depending on what kind of bells and whistles are available in that software. So these are all the cost components. There could be many others, but those are like mundane, smaller stuff. If you need a journal to keep track of all your trades, that could be a cost too, but I have removed all that. These are the base key cost components. Now, income potential. What's the income potential? When we start a business, we just have a guess. People make thousands of dollars per day trading, but we cannot go with that number, big numbers, when we evaluate anything as a business. We have to take the smallest possible number which can be achieved, without difficulty and consistently. So I have taken the smallest possible number that I could think of, which is $50 per day trading 1 hour. And here, this point is important. 1 hour, this is important because 2 slides ago I have shown that the quest here is financial freedom, right? And financial freedom will come only if you have time as well in your hand after making the money. If you trade for 8 hours sitting in front of your computer, then it's not freedom. It's another job for you. So we have set up a constraint in this evaluation that we'll spend only 1 hour, 1 to maybe 1.5 hours, and be able to generate enough money so that we can enjoy that money the rest of the day. And in that 1 hour, we found that it's reasonable to expect or reasonable to make $50 and reasonable to say that we can make $50 easily. And what's the reason for this $50 per hour? So I'll talk about it in the next slide further. So let's look at this number. If we add all these cost components, we get $40,000 to $50,000. And if we make $50 per day, there are 20 days in a month. So you'll make $1,000 per month. So $50,000 of investment and $1,000 you are making per month. So now let's look at these numbers. This means that you are making $12,000 per year. So $50,000 of investment, $12,000 per year, which is 25% return on your investment. So if you see, just at 50,000, 50 rupees, I'm sorry, $50 per day per hour, the return is 25%, then it already looks a decent return, because if you put this money, $50,000 in a bank in a CD, you will get only 5 to 6% in returns. Here it's 25%. So it's already a good a gig from ROI standpoint. If you place this money in ETF like SPY, the long-term returns from the stock market is 8 to 10%. So we see that this, even at this small number, the returns seem to be good, above par. Now there is another reason I considered this $50 per day, because if somebody is in a job, I'll take somebody is in a job and they work 40 hours a week. It means they are working 2,000 hours a year, 2,000 hours per year. Now if you multiply 2,000 by 50, it's $100,000. $100,000 per year. So if somebody is making $100,000 per year, then their hourly rate is $50. $50 is their hourly rate, and this $100,000 is much above the average household income of an American family. It's much higher, even though it's not. It may not lead to a good living. It may not make you look wealthy, but even at $100,000 per year, it's you are better than 60% of Americans, right? So that's the reason $50 is a reasonable number to consider for this math. So but $50 or $1,000 per month is not enough for a decent living. So what are we talking about? I'm sorry. So my goal in this presentation will be to demonstrate that it's possible to reduce this initial outlay to 1/10, which is only 500K, and multiply this 10 times, which becomes 10K per month. So if we make investment of 5K one time and make 10K every month for the rest of our life, then that is the business we want to be in. Then it makes business sense. Then trading will be a good business model. So we'll explore the different components of this trading business model and see how we can achieve this $10,000 of return by investing only $5,000 one time. So stay tuned. There are a lot of good things to come in this presentation. So let's explore the possibilities here. So trading, first you have to learn how to trade the right way, the professional way. And to learn, you need to make time and financial investment. Even if it is $5,000 or less than that, it's still an investment. And trading requires skills, and it's complex. Sorry about that. Something got stuck in my throat. Trading requires skills. It's complex, and there are no guarantees in trading. There are no guarantees in life in anything that we do. If we want to go to Walmart from home, there is no guarantee that we would reach. God forbid, every trip should be successful. But the point is, whatever we undertake, there is no guarantee in that. Similarly, there are no guarantees in trading. And all this is mainly because there are mistakes that traders commonly make, especially newbie traders. So let's understand what those common mistakes are and how to avoid them. So to avoid common trading mistakes, and which are often costly, one needs to have a high probability trading strategy. So if you trade only high probability trading strategy, then more often than not, you will win and you'll be profitable. And then we must automate the trading process. So trading process, it's very important that we automate trading process as much as possible, especially because it's about day trading. You have to be precise, you have to be fast, and you cannot have fingers slipping on the keyboard. So automation is important. So for that, you need a software, a good trade automation software. And then very important, you must trade with other people's money. Even if we have reduced the cost, of trading, it's important that your investment is as small as possible. And if you have to deposit $25,000 in a brokerage account, and if you lose any part of it, your psychology will come in the way, and it will force you to make incorrect decisions in the heat of the moment. People make stupid decisions when they see a small profit. They close the position quickly and get out of the trade. When they see the position going in red, they hold on to it with the hope that market will turn around and give them profit. So when you use other people's money, that psychological issues are overcome. You are more detached to the outcome of your trade, and you are more sensible in making decisions. So that's why it's important use other people's money, and I'll show you how to get other people's money for your trading. And then you must trade right market hours. And here, if you are in a job, and if you have a day job particularly, you may not find time to trade. Market opens at 8:30 Central, closes at around 3:15 Central. And if you are at your work, you won't be able to trade. So when would you be able to take up this trading business? So for that, we have decided that instead of stocks or options or anything, we would trade futures. Futures are based on the underlying stocks only, or the ETFs, or indexes, but they come in contracts, and those are customizable contracts. They have a lot of liquidity because a lot of market participants are there, and they trade futures. With futures, you can control large positions. You can with just one contract, you can purchase 100 stocks of 100 shares of underlying instrument, which means that with the small movement in price, you can profit a lot, which could also mean that with small movement in price, you could lose big. So in this model, we leverage the profit part. It's small movement. We try to profit and get out of the trade, and we take only high probability strategies so that odds are in our favor. So that's why we use the benefit of leverage that futures offers. Then futures are diversified across markets and asset classes. So here is an example of certain future contracts, like ES for S&P 500, NQ for NASDAQ, RTY for Russell 2000, YM for Dow 30, CL for crude oil, GC for gold. And there are equivalent micros, which are 1/10 the size of minis. and the symbols for them are MES, MNQ, M2K, MYM, MCL, MGC. So these are the common futures instruments that we trade and recommend because they have a lot of liquidity. There are many other types of futures also. Once you become expert, you can trade all those as well. We are also trading Bitcoin futures these days, MBT, and we'll come out with a strategy for all our members soon. Now, how to get started, with futures trading? It's simple. You open a futures trading account with our recommended, with a brokerage firm. Our recommended brokerage firm is Ninja Trader. And then you access Sliver Bullet Pro, our software, on Ninja Trader platform. Our software works on this particular platform. And then you practice strategies that we teach in Sliver Trades Academy. So high probability strategies, market condition, and the trade management, risk management, all that we teach in our academy and through our classes. So you practice those strategies on the platform, and you get started. This is a simple way to start. But the details of Sliver Bullet trading system is here. It's a 6-step path. First one I covered, you install Sliver Bullet Pro software on Ninja Trader platform. Number 2, you practice the automated strategies on a simulated account first, because you need to understand the platform, understand our software, understand the behavior of the market, all that. So you first try it on a simulated environment, which is part of the platform itself. Then you sign up for a funded trading account. And this is where you start using other people's money. There are companies that would offer you their funds for you to trade, but before they give you their real money, they want to evaluate you. To get an evaluation account, you pay a monthly subscription. Subscription could be very nominal, anywhere from $15 to $50, depending on the size of the account and the provider. You purchase that account and you trade, in that account using the software in an automated way, and you try to pass the evaluation. So how this works is, say you want an account which is called 50K account, because it's named that way, which gives you a buffer of $2,500, 5% of the account. So the goal here is you achieve $3,000 on this account without losing this $2,500. If you make $3,000 of profit, and there is no limitation, it's no time bound thing. You can take a month, you can take 2 months, you can do it in a week. You can, in a week you achieve. As you become proficient, you can get there, but initially it will take you a few weeks to achieve that profit. And you have paid only a small fee for it. Say maybe you pay $30 to get this account, and you pass this challenge. And once you pass this challenge, what you do is you get a paid trading account. Now the company has evaluated you, you have passed their challenge. Now you are eligible to upgrade the account to a paid trading account. And to upgrade it to a paid trading account, you pay a one-time fee of about $150, give or take. So depending on the account size, it varies. But for this account, you pay $150 and obtain a paid trading account. Once you get a paid trading account, here you have to build something called loss buffer. So whatever was the loss buffer here, you have to make a profit of this $2,500 first, so that works as your cushion, loss buffer. And once you have achieved that loss buffer, anything above this $2,500 is yours to keep. Say you make $1,000 above this, you can withdraw $1,000 now, and you have to give a 10% commission to the funding provider, because that's their business model. They want a share of your profit. They take 10% and give you 90%. So from here on, say every week you make $1,000, every week you can withdraw $900 from the account. So and thing does not stop here. That's just one account you have obtained. Now you repeat this steps 3, 4, and 5, and then you get your second paid trading account, then the third one, then the fourth one. That way you build a portfolio of funded accounts, and that's when the magic happens. Once you start building a portfolio, say you have built a portfolio of 5 accounts, all right, and you make $200 per account, it means you are making $1,000 in all your accounts combined. Say your goal is to make only $200 per day in 1 hour. Then if you have 5 accounts, you can trade all 5 accounts at the same time parallelly, and it's possible to copy trade from one account to the other and achieve or replicate this profit across accounts. And that's when you start multiplying your income. Imagine it as a rental property business. You obtain your first rental property, you make a deposit of 10% of the cost of the rental property. You obtain loan from the bank, which is basically other people's money. 90% you obtain from a bank. You have put 10% from your pocket, and you collect rent every month. After 6 months, you decide that, okay, now this rental property is stable. You hunt for another rental property, and then you put 10%, take 90% loan, and obtain another rental property. That second property is also out for rent. Similarly, in that way, people over a couple of years build a portfolio of rental properties, 5, 10, 20, 50, 100. So here you can do the exact same thing, build a paid trading accounts after accounts, and trade them parallelly using another software called CopyTrader. And a lot of brokerage firms provide CopyTrader as part of the their platform, and you make income. And that's the secret to doing this for rest of your life. And it's much easier than a rental property business, because in rental property you have to hunt for the property, you have to maintain it, you have to look for tenants, you have to avoid bad tenants, things like that. So here you don't have all those issues. And this is the business model of using other people's money and doing day trading using futures, and benefiting from the leverage that futures offers. Now let's understand the Sliver Bullet trading system. So using this software that comes as part of the system, you can trade in a trending market, a reversing market, sideways market, all types of markets. You can automatically scale in and scale out. In the big demo, you saw that when a position was going against market was going against the position, it automatically added more contracts and came out for break even with small profit or small loss. So that's the feature which is already in the software to help those who do not know how to do it manually. And then you can see the real-time performance on the screen. The software provides you real-time performance, which means that you do not need a big setup. If a trading comes in your mind, you see pictures, people have 10 monitors around them, and trying to make sense of the market. You don't need all that. We recommend that if you are at home, trading at home, you add one additional monitor. So one your main monitor and one secondary monitor. With two monitors, you can trade easily. But if you are on the road, if you have a laptop with 15-inch screen, you should be able to trade, because everything that you need to see can be shown on one screen. And especially on the chart, you get to see the profit you made, the unrealized profit, the number of contracts that are open, number of positions that are open, the account you are trading, the trade recommendations, what the strategy you should take in this kind of market. All that is visible on one chart. So that real-time performance monitoring and recommendations are part of this software, which is part of the system. Now we provide assistance in trade funding. We have affiliations with several good funding providers, from which we provide you discount codes so that you can obtain their subscription for less, and that you get through us. And then we provide training and live demos. We trade in the live market and show you how to apply your strategy in real time, in addition to whatever the live online classroom sessions we have given you. So all this is part of Sliver Bullet trading system. Now, since you have joined this webinar, I just didn't want to give you the business system that we are offering. For your time, I want to give back something to you, so that if you are trading, you can get something out of this webinar and apply it to your trading from the very next day. So I want to give you some understanding of how the market works. This is just at a high level. You cannot cover everything, which we cover in 4 trading sessions in one webinar. So I'll give you some peak view, which can really be helpful. So let's understand the market conditions. There are only 2 market conditions. One is trending market, one is sideways market. So trending market could be trending upwards, or it could be trending downwards. Both are trending markets. The sideways market could be this way, sideways, not going anywhere, swinging back and forth. Now the uptrending market could also be swinging and going up instead of this narrow range, or downtrending market could also be swinging and going down. Let me make it a nice swinging market. Okay, and the sideways market could be in a very narrow range or flattish, going nowhere for an extended period of time. So these are the 6 flavors of trending or sideways market. Now I would like to number these 1, 2, 3, 4, 5, and 6. So our software and our strategies work in all these 6 types of markets. All these markets we can make it work, or it works. So, but we recommend that traders, especially the new traders, avoid this market condition number 4. It's this market, which is very narrow for extended period of time, should be avoided. And the reason for that is, if a market is flat for extended period of time, it has to break out one side or the other. It cannot stay flat forever. At one point of time, it will break out. If a trader is waiting for it to break out so that it can ride the wave, as soon as it breaks out, he would buy the stock if it breaks to the upside. And we know that breakouts often fail. 95% of the breakouts fail. And what it means is, if a trader has bought this instrument here, placed a stop loss here, then since the breakout fails, it immediately tanks and takes the stop. And now trader has incurred a loss, and he would short here, wants to recover his loss, and places a stop here, and the market turns on him again, and it has taken the stop, and now market won't stop. It will continue to rise above, and the trader has lost a lot of money in that, maybe half of his account, and he has no courage to take another position, thinking that, hey, there could be some manipulation going on, and he'll continue to lose money. Or sometimes they make stupid decisions, and they, when it has gone up, they short again here, thinking that it will come down again, but it doesn't, and it keeps going up and takes away all the money that the trader has for the day. So that's why we say that avoid this particular type of market. Now, this is shown. Yeah. So this is the neater diagram without the scribbles. This is market condition number 4, which should be avoided. So when you are trading, remember, if the market is flat in and there is no movement in the market, that's not to be traded. And it's, in fact, it's one of the laws. We have like 7 trading laws that we teach, and one of the laws is we trade only in a moving market, and this is not a moving market. This is flat. Price is not going anywhere. Price is not moving. So to give you an example of how it looks in a real market, this is a chart of perhaps Nasdaq. I don't remember which instrument it is. Yeah, it is Nasdaq actually. And here you see bar chart, and you to an untrained eye, you may not know what's going on, but to a trained eye, it's visible that this is a very narrow range compared to where the stock has been and went. Very narrow range, flattish. Market condition number 4 has formed, and if somebody bought the instrument when there was a breakout, you see a faint line. This faint line to the upside was once a solid green bar, enticing and inducing traders to buy the instrument. And if somebody bought it, place the stop here, you see the market tanked, gave up all the green it had, and became red, such big red that somebody would have thought that market is going to tank, and they must have shorted here. They shorted here, placed a stop here, and what the market did, it started going back up again, went up again. And if somebody thought that, okay, it went up too high, it's time to short again, all right, so that they could recover all their profit when it goes down. What the market did, it did not. It gave up a small move to the downside so that people can short even more, but it took everybody's stop loss. If they had stop here, everybody stopped, and then they kept moving back up, and it would have given like 1, 2, 3, 4 losses to an inexperienced trader. So this is what we should. This is why we say that when the market is sideways in a narrow range for extended period of time, you avoid trading that kind of market. Not that we don't make a profit from this kind of market, but we know that what to look for and how to be careful in this type of market. So that's one example. And here I'm going to share our main absolute gold information, which is market DNA. With this information, you will not see the market the same way again. It will be a totally different way that you'll be looking at market if you are doing if you're going to use it for your own trading, because uh, there is no other way for market to behave, and I'm going to explain this in detail. So pay attention. This is going to be a very important couple of slides that I'm going to share. So this is the diagram for market DNA, and why we call it DNA. So in our observation, we found that market mimics life. Stock market, futures market, financial instrument markets, wherever there is a exchange of money, wherever there is a movement, it behaves like life, mimics life. And what it means, so life's so, life's when I say life, it's basically people's behavior, and people's emotions like greed and fear are imprinted on the movement of the price of the particular instrument. It's clearly visible that human greed and fear is imprinted. And if life has DNA, like people have DNA, animal, plant life, all have DNA, which is basically a smallest building block, right? So market should also have a DNA which is smallest building block of market. So if that is true, then what's the shape of that DNA, right? How does the market's DNA look like? And we know from our high school biology class that human DNA or any living being, including plants and animals, DNA is in this double helix form. This form is called double helix, right? Double helix. Now, if this is the shape of human DNA, then what is the smallest movement of market looks like? What does it look like? So if we observe, price moves like this. Price goes up, comes down, goes back up again. If a price is moving down, goes back up and comes down again. This is the fundamental movement of price. If we smoothen it, movements are not this pointy. If we smoothen them, then this is how the movement looks like. So we figured that we could use this as the building block or DNA of the stock market's price movement. And if we connect these strands of DNA, multiple of them, and this is how the price moves. This is how the price moves. And that gives us the market's movement, behavior. Now, this is just the flesh, just if you lump a trillion DNAs together, it's just flesh. We have to give it a structure so that we can understand the anatomy of the market. So how do we understand the structure or the anatomy of the market? For that, what we do is we use these two moving averages, 21 SMA and 233 SMA. These are like bones and musculature of the stock market. The 21 simple moving average and 233 simple moving average. There are people who are totally inexperienced. To help them understand, these moving averages are the average of the price of last 21 periods. So if it is a 1 minute chart, then 21 SMA is the average. See, if you look at this point, this price is average of last 21 price units of the stock, and this point is last 21 periods from here. Similarly, 233. if a price point here is average of last 23 bars that came, last 233 bars that came before this point. So the price could be something like this, it could be going up, but the moving average would be somewhere here, which is average of last 21, counting from here, 1, 2, 3, you go back 21, and that's the average price that this point is denoting. So don't worry, these will be explained if you decide to join us, or just Google what this moving average is. I cannot go into detail, but this is the general idea. So we like to use 21 SMA and 233 SMA to understand the structure of the market. And you may ask, why 21 SMA and why 233 SMA? What's the secret behind it? So here again, we try to look at life, look at nature, and we understood that the nature follows certain patterns. If you look at the patterns of a flower, or if you look at the patterns of a seashell, you will see that the outer layer, the ratio between the outer layer of a flower and the petals of a flower and the inside petals of the flower have certain ratio, and that ratio is called Fibonacci series. Fibonacci series is a set of numbers like 1, 2, 3, 5, 8, 13, 21, goes to 233 and keeps going, right? So we have, the nature follows certain series to manifest itself. The flower petals, seashells, even they say coastal lines have follow these patterns, the formation of crystals, all that. So we have taken these two numbers from this Fibonacci series, which are found in nature, and used it as moving average on this price structure. So now we understand. Now we see that, okay, this is how the market looks like. So if we say here, now it's time for us to overlay the 6 market conditions that we saw in the previous slide on this market DNA structure, and see how it looks. So condition number 1 was market going up. Market condition number 2 was market making swings and going up. I'll use a different color so it's visible better. Market condition number 1 was market going up. Market condition number 2 was making swings and going up. Market condition number 3 was making swings and remaining sideways. Market condition number 4 that we should avoid comes here. 5 comes here, going down. And this is market making swings and coming down. Now I have overlaid this, the 2 pictures, one from the previous one and one here. So just with this knowledge, your trading should improve in that now if the price has gone up, it has to come down. It cannot keep going up again to infinity. If price has come down, it has to go up. And if we observe, price goes up, comes back to 233 SMA again and again, goes away from 233 SMA and comes back to 233 SMA, goes away from 21 SMA, comes back to 221 SMA. 21 SMA moves away from 233 SMA, then it comes back to meet 233 SMA. So this happens again and again. It's like a breathing process. Breathe in, breathe out, breathe in, breathe out. It's like a living mechanism. This stock market works. It's a living mechanism. And we see that, it happens again and again. It happened 1,000 years ago, 100 years ago. It will continue to happen for next 10,000 years ago, 10,000 years from now, as long as the current laws of physics are valid. If the current laws of physics are valid, human emotions will be, according to that, our emotions will flow in, go up and down, and that will get reflected on the stock market. And this 233 SMA, there is some magic about it. We call it river of life. River of life. I like to call it river of life. The reason is, uh, life depends on water. Again, I'm bringing life as an example to show how closely market reflects or mimics life. So life depends on water. Right? All civilizations have risen around some river or a huge water body, right? Um, Animals move away from water to graze, but they come back to water again and again for their watering needs. So same way, market goes away from 233 SMA but comes back to 233 SMA. Happens all the time, right? So that's why I like to. That's why 233 SMA is that important. So with this, your trading should improve. But only one thing is missing in this picture now. What is that? You could ask that, okay, market has gone up. Now, when do I know that market is going to come down? How do I know? When it's going to make this turn? When it's going to make this turn, how do I know? Is there an indication? Is there a board that shows me, okay, take exit number 133A? So when we go on a highway, when there are exits, we see a board. But does stock market present us a board or sign next that it's going to make a turn? And my answer is yes, it does. It does give you an indication that it's going to make a turn. And what's that indication? To understand that, we have to understand what happens in our real life when we want to make a turn. We are traveling in a highway, right? This is a clover. You have four-way intersection in a highway, in a freeway, and you want to make a turn, or you want to continue your journey. That's fine. But these are the turns, major turns, right? And we have to understand what happens in these turns. Here, of course, you will say, there are signs that the turn is there, exit is there. You can take a new freeway after making a turn. All that is there. But in stock market, it's not there. So to understand what how to recognize that the market is going to turn, we have to understand what happens at these turns. So if we observe, there are restaurants at these turns. There are gas stations at these turns. There are motels or hotels at these turns. People stop there for food or fuel or for rest, right? So what's happening there? So if you observe it, there is a exchange. What's happening at the intersection is exchange. I will change the color again. So, okay. So some kind of exchange is happening. So money is changing hands. People are giving money for goods and services. So at these turns also there is a heavy exchange. A lot of volume is generated. People are trading back and forth. Money is changing hands. They are trying to figure the next direction of the market. So you'll see that market is swinging back and forth at these turns. So what it means? It means the market condition number 3, which I showed here, market condition number 3. This is the market condition number 3, right? Going back and forth. The same market pattern is repeated here on these turns. The same, exact same. Things go back and forth. Market condition number 3. And that's when you recognize that, okay, market is about to turn. It has gone down enough, before it goes back up, because it has to meet 233 SMA. There is no escaping. So it has to make a move, and that's when you'll buy a stock. You buy here and sell here after you have reached 233 SMA. A short here and cover here. This place. So you ride all this movement. You can ride this movement. And you can do this again and again and earn a living for rest of your life. So guys, take a picture of this, because this is how the market behaves again and again. Every time, there is no escaping. Just applying this knowledge, if you haven't been profitable, you can become profitable. And this is a neater picture of how it looks. And you can use this for your trading. Now let me give you an example as well. So in this picture, you see the example that market went up here, right? Sorry, this is 233 SMA. This line, this pink line, and this green line that you see here, this one going up, that's 21 SMA. And market went up. This was market condition number 1, and it became sideways. This was market condition number 3, sideways. And then it came all the way to meet 233 SMA. There was no escaping 233 SMA, it came down. So if you shorted here, you could have written all this prior, and this would have been $1,000 here using NASDAQ futures. And here you could see that the 233 SMA is slanted. In the previous picture, I drew 233 SMA as a flat line, but that only showed the shape of the DNA. It did not show the orientation of the DNA. DNA could be like this. DNA could be like this. So here in this case, this 233 SMA is slanted. So price came down to meet 233 SMA. 233 SMA went to meet the price. So they met at this point, and this is when the market became sideways. You will you look for shorting, and you write the move. And this happens every time, again and again, every instrument. It's just that we need an eye for this, and once we have the eye, we can profit from the market. Now, this is the time I usually provide the demo of this software, and that demo I'm going to continue showing you. In fact, it's so slow that it's not running fast. My computer, I think it was left on overnight, and even though I rebooted in the morning, I think it was still hot from being on overnight, and because of that heat, it's running so slow. So I will continue to do this demo and see if we are and show you what kind of profit it makes. And it is slow, guys. I'm sorry for that. What you can do is you can go to YouTube and watch previous webinars videos, and you will see how the software works. I have live trading videos as well, and you will see how it works. So this is so here we have already made 974. So about $1,000 we made in how many? Less than 15 minutes. Market opened at 8:30. It's 8:43 now. In less than 15 minutes, it made $1,000, right? $974. I could have continued. Once it reaches $1,500, the software will stop automatically because the profit target has been reached. But I want to show you, this was a discretionary trade, and I recommend that we always take discretionary trades, meaning we trade with the knowledge of what market is going to do next. So here I applied the knowledge what the market is going to do next. That is, it's going to take a long trade. It's going to go up, so I took the long trade, right? So since market was trending upside, market opened above previous day's close, I took only long trades. Question could be, what if I'm wrong? What if I'm wrong? Market does what it does, and I cannot be right all the time. Is there any refuge or recourse if I go wrong? Answer is yes, and I will show you what I mean. So what I'm going to do is I'm going to start this demo again from where I started and show you what if I had taken trades in the opposite direction, right? Meaning when if I was wrong, right? Yeah, I'll trade without discretion. I'm setting this timer to again market open. Is I'm resetting it to market open, and I'm going to use the same two contracts, and this time I'm going to take trades blindly. Again, this is not a recommended way of trading. This is not how we trade. We are not supposed to trade this way, but what I'm trying to prove that what if we are wrong? We take both long and short, indiscriminately, like a coin toss. If I want to trade, can this software handle that situation? We see that one trade it already took, and but most likely, let's see if it is profitable or not. I cannot guess. Software is running slow, so otherwise
order filled.
It would have been profitable by now.
Target.
So this was a break-even trade, only $18 of profit here, and
order target filled.
So I'm taking trades without any discretion here.
Order filled.
So this looks like another break-even trade. The point here is, if you have made a wrong move, it tries to get you out of that jail, by scaling in. So that's part of the software. And it doesn't mean that you should indefinitely make that kind of move. When you realize that, okay, you have made mistakes or two mistakes, and software has bailed you out, you should use your discretion now and reassess the market and trade in the right direction. But here, just to give you a demo, I'm just continuing to trade.
Target filled. Target filled.
So you see here, $188 in 2 minutes. Randomly, this is random trading.
Filled.
So this was again another break-even. Market is going down, and I have taken a long position. So software is trying to get me out of jail. So unfortunately, my computer is running terribly slow. So it got me out of jail, $211. So even when I'm wrong, I'm profiting a bit. So $211. Earlier I showed like we are close to $1,000, right? When in the first round of demo I showed where we traded with discretion.
Target filled.
So I hope you get the idea. If not, feel free to watch our other videos on YouTube, and you will know it better, how the software behaves. So with that, I'm going to stop here.
Target filled.
So it made a small loss here because it was trying to get us out of jail. So $139 it stands at.
Order filled.
So maybe one last trade, and I'll go back to the presentation.
Target filled. Target filled.
All right. So $271. Okay. In the previous one, it was I showed you how it made $1,000 in profit, $271 here without any discretion. So now going back to the presentation, we'll go back to our business model. Right. Now let's look at their business model. So we have seen the software make like several $100s. And now with that knowledge, hopefully we can, assume or make an assumption that $100 per day is possible. And we saw that in 20 minutes it made $1,000. And in the second round of the demo, where I used no discretion, it made $271 in 10 minutes. So if I trade 1 hour, I should be confident now that I can make $100 in 1 hour, right? If I'm confident I can make $100 easily, consistently, then that should become the number to use for my income potential. So $50 is $1,000 per month. $100 per day is $2,000 per month, $2K per month. And now, if you do it across 10 accounts, you build a portfolio of 10 funded accounts, it means it's $20,000 per month, or it is $240,000 per year. So here investment is, which I'm going to show how to bring it down to 5K. One time of investment 5K, and you are making $240,000 per year every year for rest of your life using this model. And trust me guys, this 10 accounts, it's a long-term thing. It will not happen overnight. Goal will be for you to add one account every month or 2 months. Maybe even if you take one account, you add one account every 2 months. In a year, it will be 5 to 6 accounts. You'll grow to 5 to 6 accounts per year. So this is a scaled up model. So even if you consider 5 to 6 accounts per year, it is $10,000 per month trading 1 hour a day, right? So with that, so we'll look at eliminating all this. We don't want to pay data fee, no trading platform, no trading funds, no trading education is going to be part of this cost. Trade automation software would be part of this cost. So because we'll use funded accounts, other people's money, we don't need to shell out our own thing. So if all these things are eliminated and brought down to $5,000, and if the income potential is to make $1,000 per account, and if we have 10 accounts, it could become $10,000 per month. Then that's the business model we want to be in. So one-time investment of 5,000, trade for 10 accounts simultaneously, and make $10,000 per month, and that's only $50 per day per account. If you double it, it is if you make $100 per account per day, right? It is $20,000 per month. So that's the potential of this business model. Now, to give you an example, this is how it looks like. We traded about 14 accounts at the same time, and I sorted these numbers in ascending series like this. So we have large numbers, don't consider them. Small numbers, don't consider them. Take the numbers that are in the middle. $100, aim for $100 per account, trade across multiple accounts within 1 hour, sometimes only in few minutes. It's $1,400. And our aim is to be consistent. Our aim is not to get a windfall. It's possible to make $1,000 per account, and in one day we can generate $14,000. But those will be risky trades, risky behavior. We want to keep our behavior under control. Be a disciplined trader, make a small amount every day, but be consistent again and again, and that's how you can keep it going forever. So it's about following the strategy and not deviating from it. And this is another example. Another day when the market was not conducive, we took fewer risks and did not trade many accounts. And this is a kind of number we see in that kind of situation. So even if it is only $50, right? Even if it is $50, it's still, across 6 accounts, it is $300. So some days could be $300, some days could be $1,000, some days could be $1,500. It all depends on the market condition and what you do. So it's all, there is no one business model. You can, once you learn the system, you can customize or figure out your own business model depending on what time of the day you want to trade and what instrument you want to trade. So the software part of this system helps you the same way as the training wheels of a bicycle or guide rails of a bowling alley. It prevents you from falling down. Even if you make small mistakes, especially when you are learning, you need to understand how the market works and take the right trades, high probability trades, and the software helps you the same way as the training wheel. At some point of time, in a year or 2 or 3, and whenever you become proficient, you could get out of the need to use the software. People go into swing trading, people go into investment, because now they understand the market. Now they know what to do in a small time frame market, mid time frame market, and long time frame market. So this is the slide where I like to show the certificates. These are all real certificates that the funding providers have gave us for passing individual evaluation accounts. We normally take 50K account, and whenever we achieve the profit target, the funding provider sends us a certificate. It's just a good pat in the back and the recognition that you are a disciplined trader. You can follow rules and you can be profitable. So these are all the different dates that are printed. All these are real certificates that I'm showing. On this slide, there are some more. So these certificates are from last 1 year. Exactly a year ago, last year, Thanksgiving, we launched this business. And when we had only one certificate to show you guys, only one certificate that we had, and we started, that we had proven this model, this model works. This system was developed over a period of 3.5 years. The software was tested rigorously until we found that the combination of education, software, and funding all in one place. We did not launch this business, and after 3.5 years of trial, we launched this business exactly a year ago. It's kind of anniversary, I would say, today, and it happens to be my wedding anniversary as well. So it's a coincidence, guys. So started with this very first certificate. If you zoom in, if you zoom in, if it is 11/22/2023. It was year 2023, 11. So November 22nd is when we got our first certificate, and the following week we launched this. And with that first certificate, we established our credibility, and we got a few customers. And in fact, I have a customer testimonial that I would send you guys and others also. It will be on YouTube soon. So since then, all these certificates we added eventually. All these, many of them were converted to funded accounts. This is another set of certificates. June, July month, these are the certificates. August, September, this is a certificate. This is actually, this one is like a big one, 250K account, this one, this particular certificate. And these 3 certificates I need to remove because we have moved it to the next slide. Here we have October October, November certificate. And these are the 4 certificates we have. And so finally, the decision time, right? I want to reveal this price of this software, which is normally $6,000. And we are for the Sliver Bullet Pro. My goal was to reduce the cost of this whole thing by under $5,000. So in this webinar, we are offering it for 50%, which is only $3,000. So so we are running out of time. I already took 90 minutes in this presentation. And this 50% discount is available till tomorrow, this Black Friday deal. If anybody is interested in this, you can use the code that I'm going to show you. It will come with the lifetime license of Sliver Bullet Pro software, and you'll get 4 weekly sessions of training, and then followed by support. So the training curriculum, so this is the price you pay. The training curriculum is here. There are 4 sessions where we will cover all these items that we want to cover. And we also have special promotion that's going on. You will get free 50K evaluation account. And if you buy it by tomorrow, you'll get free Bitcoin trading strategy also when we launch it. It's under works. So to be able to purchase, you'll go to slivertrades.com and use the code PF50. So to do that, go to slivertrades.com and go down or click on pricing, and you will come here. You click on the deal, get the best deal, and make sure to read this agreement, because this software license is for 1 computer, and you'll be signing this agreement eventually. Add this to cart, and you check out. And here the code you apply, BF50, and make the purchase. So this gives you the software for your life. Very, very soon we are going to get rid of this lifetime license, and this could be the cost of for 1 year of software. So, and as soon as you make the purchase, you receive a welcome email and access to Sliver Trades Academy, where you have a lot of training material, including recorded videos. You go through it in addition to live trading that you receive. So this is the complete business model of Sliver Bullet Trading System. If you are ready to avail it, visit slivertrades.com and use the code BF50. It's valid only till tomorrow. So thank you very much for joining today's webinar. I know it went a little longer. And if you have any questions, email us at info@slivertrades.com or call us at 331-255-3656. Thank you very much for joining. Bye now.